Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Looking at shares of Whirlpool, they're up about 0.75% here in the aftermarket. This company also reporting earnings just moments ago. Of course, the owner of Maytag, very other brands too, but lowered its full year earnings forecast as consumers continue to shy away from some of those big ticket appliance purchases amid a weakening housing market, something we've talked about a lot here at Bloomberg. Adjusted earnings per share will be about $12 this year, the company said, down from the $13 to $15 it had previously seen. Meantime, analysts were looking for about $12.56 a share, according to our average of projections compiled here at Bloomberg. Company, though, keeping its full year revenue estimate the same, Tim, at $16.9 billion.
Let's get to the chairman, president, and CEO of Whirlpool, Marc Bitzer. He joins us from Michigan. Marc, good to have you with us. Appreciate you joining us just after these numbers cross the wire. Tell us about the quarter and specifically why you cut the earnings forecast.
Yeah, Tim and Carol, first of all, thanks for having me on the show again. Overall, before we talk about the earnings forecast, we actually feel good about our Q2. We said also after the Q1 call, this year is all going to be about margin expansion with every quarter, and Q2 was a sizable sequential margin improvement, full point on a global level, led by our all-important North America business, which ultimately relied also on getting better promotion pricing. So we feel good about the progress we made. Yet at the same time, we also, knowing the weakness of a housing market, which is still emphasis on still just there, we don't see the housing market recovering as fast as we originally assumed, probably like everybody else when we entered the year. So we're still forecasting for Q3 and Q4 further margin expansion and improvement. So we feel good about the progression. It's just not happening at the pace which we had originally in mind, and the market is not recovering at the pace which we already had in mind. But that's, in my view, only a question of when it happens, not if it happens. It will happen, but it's just later than we originally assumed.
So, I always feel like when we talk with you, Marc, we think about like the pre-pandemic world, the pandemic world, and like our recovery. In terms of some of the numbers, the consumer trends, the buying patterns, is it below what we saw pre-pandemic?
Carol, you have two almost offsetting trends. One is the replacement market, which is very strong, also from a volume side. And that is ultimately tied to increased appliance usage following COVID and just all of the in-home trends and people just spending more time in home. So the replacement side is very strong. The unfortunate side from a business perspective, that typically doesn't come with a rich mix because it's not a discretionary purchase. The discretionary side, that is all tied towards housing, existing home sales, and new home sales. And that's the part which is way softer than anybody assumed at this point. And frankly, also with the numbers which came out yesterday on existing home sales, we're basically back to 2008 levels. It's kind of multi-decade low. And of course, that is the part of the business which tends to come with a richer mix for us. And that's the soft part. So you have two offsetting trends, which kind of overlay. We would, of course, going forward, we love to see the replacement trend. But at one point, you will see the recovery of discretionary side.
We've talked with you about this replacement versus, discretionary. What's the bigger part of your business? Is it people replacing items or saying, hey, I feel like doing this, discretionary?
Right now, the replacement side is well over 60%. And to put that in historic context, you typically had it for multi-decades on around 50 or even below 50%. That doesn't sound like a whole lot, but actually makes a big difference in how the mix comes through for your overall business. So again, that's we like the volume, but it's not a very rich mix.
The biggest part of your market, or the biggest part of your business in terms of segments, refrigeration, laundry, cooking, a close third. Where do you see the most growth?
Again, it's right now overall, it's split on the categories. It's largely in replacement. So laundry is still very strong. Refrigeration in the kitchen is still a little bit softer because that typically comes with a replacement or remodel of an entire kitchen. But it's more of a high end, the entire kitchen suite, like KitchenAid suite or dinner suite, which is right now softer than we would expect in a normal cycle.
All right, so we'd be remiss by not addressing the elephant in the kitchen, or if you will. Last month, Whirlpool shares, jumped. Reuters had reported that Robert Bosch was considering a bid for the company, that they've been pushing, that company's been pushing kind of outside its business. Did it make a bid for the company? What can you tell us about that?
unfortunately, I can't tell you a whole lot more than we stated already, is that we just don't, as a policy, we don't comment on rumors or market speculation. As you know, it's been one article out there which triggered a lot of noise. And, we also in the past, there were rumors about Whirlpool in the past, and there will be rumors about Whirlpool going forward. We just don't speculate on and comment on these ones. So unfortunately, I know you were poking on this one, but I can't tell you a whole lot more.
I have to poke a little bit more, though. Is it a rumor? I mean, is the company for sale at this point? And is that something that maybe you've been getting some pressure from investors?
No, but so again, it is a rumor, and we can't comment, and we won't comment on this specific rumor. But we're a public listed company, Carol. So
I know.
by definition, there's in a certain way, our company is for sale every morning at 9:30 when the stock market opens. And right now, it's a good deal. So,
but there's sales and then there's sales. You know how this goes.
You're joking about saying it's a good deal, but what, in your opinion, do you think investors are missing about the Whirlpool story right now? Down 19% so far this year.
Yeah, Tim, I shouldn't be arrogant about the investor. The market is always right. So what I think the argument for Whirlpool to be made is, yes, of course, we're still in a negative macro cycle, but that will turn at one point, and i.e. the U.S. housing market, and that will not be just a short recovery. That will be probably a multi-year recovery of the housing market. There's literally not a single company better positioned to benefit from the upside. We're a key supplier of 8 out of the top 10 U.S. builders. We're very strong with our portfolio in all the homes. So once that market recovers, I think we will be a disproportionate beneficiary from a market. And, it's by definition, the market is always right, but I would say that's the argument, particularly for the long-term investor.
Hey, Marc, we also have to go.
Wait.
Go ahead.
On that, though, if the market's always right, your stock rallied in a big way in June on this Reuters report that Bosch was considering.
She's still poking. She's poking.
So if the market's always right that they were excited about a deal, does it make sense to, I don't know,
Yeah, I appreciate your relentlessness in poking, but I can't and won't tell you a whole lot more. Listen, there's always speculation element which you might get in the stock, and as you know, there's short trades and people who are kind of not long-term investors. Right now, again, it's we had also these speculation rumors in the past, and again, I expect them also in the future, and that's just the nature of a public listed company. But again, you won't get a whole lot more from me on these rumors.
Okay, Marc, we'll end on something really easy for you to answer. U.S. politics. I know. Please come back after all these questions. We love you.
Us, please.
So, look, no question, front and center in a lot of investors' minds and a lot of voters' minds. But just very briefly, does it matter to you? You have a really complicated supply chain. You do some importing. Does it matter to you who's in the White House?
Tim, obviously, as you can tell from my accent, I should be careful about giving advice on U.S. politics. But I firmly believe, as a company, we encourage our employees to form a political opinion, and they should vote. Wow. But I'm not going to endorse any candidate, left or right. But we strongly encourage our people to form their opinion, get informed, and vote. Period. Now, of course, with our strong U.S. exposure, also from a manufacturing side, we're not only the last American appliance company, but we have by a long shot the most jobs in the U.S. on appliance manufacturing. Of course, we have a strong vested interest in having a competitive and fair level playing field as a U.S. producer. So topics like steel prices, etc., they matter for us.
Right.
And we're not asking for subsidy or disproportionate help. No, we just want to be fair, and we want to be, we don't want to have our arm tied with one arm tied behind our back as we fight. We're ready to fight, but it needs to be fair and level. And that's, of course, yes, right. That is a strong vested interest which we have.
Well, you're always fair with us, and always we appreciate your time. Marc Bitzer, be well. So appreciate it. Chairman, President, and CEO of Whirlpool, Marc Bitzer, joining us from Michigan. Shares of Whirlpool, they've been kicking around a little bit higher, a little bit lower in the aftermarket.